going on, guys? Quick update video for the weekend. So I know Friday was probably a bummer for a lot of people. Vibe was pretty low, you know, red day, pullback. Keep in mind, we were nothing but green all week. We're in an uptrend. It looks great. It looks great. It's a healthy pullback. Pulled back to the 0.5 fib. It's a healthy retracement. It's perfect. Now, I want you to really pay attention. I want you to really pay attention to this first chart that I'm going to show you, because this chart says it all. There's nothing else to say besides this. But I'm going to go over this chart. I'm going to go over the macro like I always do. I'll go over the flat portion and the EMAs, and then we'll zoom in even more to the micro tracking, and then we'll go over some of the quote unquote coincidences, if you will. And also keep in mind, it's not just AMC. It's not just GameStop. It's the entire market. The entire market's synced up. S&P 500 is about to go to all-time highs, retesting a macro breakout. Everything is synced up. The market's bullish. Left and right in the news is just distractions, wars, fucking this and that. And then if you're paying attention to what's going, and you know, not the fundamental guy. It's irrelevant to me. It really is. But, you know, a lot of people like to pay attention to fundamentals. I'm not saying that it has no place in the market. But, you know, just pay attention to what's going on with AMC right now, with Taylor Swift, with Beyonce. Things are looking up, and there's going to be a catalyst, and we're there. We're there. So, you know, that being said, let's get into the video. Pay attention to this chart. Do me a favor and just pay attention to what I'm going to show you. Now, you've seen this before. This is January 15th, a 1-minute time frame on the left, which is AMC. AMC is January 15th every day on every time frame, over and over and over again. From the monthly chart down to the 1-second chart, January 15th every single day. Now, I've shown this. This is January 15th, a 1-minute time frame versus AMC's macro, a weekly time frame. And this is old. This is an old chart. I made this chart, I think, a little bit over a month ago. There's like 4 weekly candles that are missing here. I updated this chart, and I actually used the log chart on AMC because I think it displays the image a little bit nicer. Plus, it's updated now with the rest of the weekly candles down here. So I want to go over that because this looks amazing. It looks amazing. We are moments away from our macro break and squeezing. Moments away. I'm going to go over it, but genuinely to me, it looks like a few weeks. A few weeks. I don't want to get into dates. I'm not going to get into dates, but pay attention to this. January 15th, 1-minute time frame. AMC's macro, a weekly time frame. So here's the W. Here's the W, and then you get your first run, the January equivalent right here, as you see it right here. You pull back from that, a W, ascending higher lows. You pull back from that, a W, ascending higher lows, into your second run, your June equivalent right here and right here. Here's the flag. Here's the flag right here. Keep in mind, these are 1-minute candles, so it's not going to look exactly the same, but it's very close. Then you get to the downtrend. So you have your first bottom right here, bounce up from, and then you find your descending trend. Over here, same thing. First bottom, bounce up, there is your descending trend. You reject right off of it. Keep in mind, every time we've touched this trend, we've been halted. So there's your first touch, there's your first touch, come down again, back up to the trend, lower high. Come down again, back up to the trend, lower high. There's your second touch. Come down again, back up to the trend, back up to the trend. There's your third touch. Come down, higher low, come down, higher low, and then back up to the trend, lower high. Same thing. And then you get your knife. And there's your knife and the V. So I don't even know what else to say besides this looks absolutely perfect. Genuinely. Theoretically, what we need to complete the V is a weekly candle that touches $14, $13.80 more or less, coming back up to the top of this range right here. So you see all these wicks that you have right here. This would be these wicks right here. We need a weekly candle to come up to 1380 roughly. That would complete the V. And then your macro break, which is a gap up over the top of the range, which is what you see here. It's your micro break on a 1 minute chart. We're looking for the macro break over the top of the range. Just look at it. Just fucking look at it, would you? I don't know what else to say. I really, really don't. We are moments away from squeezing. Moments away from seeing our macro break on AMC. This looks absolutely perfect. This is the updated chart. There was, I think, 4 candles missing, 4 weekly candles on the older chart that I just showed you originally. So, you know, I updated it yesterday. It looks incredible. And that's it. That's it for that. Now we're going to get into the actual macro perspective of an AMC. And, you know, I cover this in every single one of my videos too. But now we're going to get into the actual macro perspective of AMC. And again, you know, we're right at the end of it, moments away from our macro break. So here we go with AMC's macro for the 10,000th time. So starting from IPO, your initial push, the first bull run, your January equivalent that you see right here. So again, this is one macro all the way to this break right here. So this is the end of the first macro. And then this, the January squeeze into the June and the pullback is the second macro. So this is one macro right to the break, right before your January squeeze. That's one macro, 2 peaks, the V, and then a descending wedge. And then here's the other macro, 2 peaks, the V, and then a descending wedge. So the green dot is your January equivalent, which you pull back from into an ascending W on both sides, into your June squeeze, which is the yellow dot, and then the V shape. So here's the V shape, and then here's the V shape. Obviously, this played out a lot faster. There's more volume. Volume will be relative to speed. And then right at the top of the V, this V move here, you break down from it, you gap down. This is the break into the downtrend, this gap right here. So this whole time you're in an uptrend, as you are here. This whole time is an uptrend. And this whole time is an uptrend until you get this break, this gap down right here. And that's where you get into the descending wedge. And also keep in mind, the support, the bottom support of the descending wedge, we're running from the January peak. So January peak, there's your descending trend line, your descending support line of the wedge. And the resistance line of the wedge, we're running from the top of the V off of the June move. So the top of the V down, that's your resistance. And then over here, same thing. So from the January, here is your support on the bottom, all the way down. And then your resistance is off of the V from the June move, all the way down. So getting into the downtrend now, and I've covered this multiple times, I'll do it again. It's green, red, blue, flat portion, squeeze. So the green, you come down to support, very choppy, more or less a W type move on both sides. So you come down to support, very choppy, W type move back up to the resistance, where you reject, get this cup in the red, again rejecting, into the blue, come down, bounce up. Where am I here? Come down, bounce up, continue down, and then you curl up towards the end. Continue down and then curl up towards the end, and then you drop to the flat portion. And you know, I've covered the flat portion a million times. I've been tracking this flat portion since my very first video on YouTube. My original tracking was slightly off. Learned a lot since. And it looks amazing. It looks absolutely amazing. You know, applying indicators to this, it couldn't look better. Genuinely, it couldn't. So dropping from the blue, here's your flat portion. You get this double peak move, first and second bottom. Second bottom's a higher low on the daily. And then over here, same thing. Dropping to the flat portion, you get your double peak move, first and second bottom. Second bottom's a higher low on the daily. Then you get your tri-peak, which the tri-peak actually pokes you out of the wedge. So the tri-peak pokes you out on both sides. So there's your second bottom. You get to the tri-peak, pokes you out the wedge. And then coming down from the third peak of the tri-peak to your third and final bottom of the flat portion is the point at which support and resistance of the wedge meet. And over here, same thing. The point at which support and resistance meet, that's your third bottom, your all-time low landmark, your lower low, the lowest low of the flat portion, all of that. So From that third bottom, this is your bottom, and I mentioned this in my last video, the point at which the support and resistance of the wedge meet, that point is, it's not the, I'm theorizing it's the start of a new macro, but it's not the point where you get your macro break. So that's the point at which the uptrend into the new macro starts, but your macro break is the gap that follows into the squeeze. That's what we're looking for, and we've already started the uptrend. Absolutely great week last week. Fantastic week, a very bloody Friday all around the market. Market-wide, very bloody, but an absolutely fantastic week for AMC last week. This is the macro perspective on AMC. What we're looking for now is a continuation of uptrend and a squeeze. A macro break, a gap up into our squeeze. And we are moments away from getting that. So again, this trend, this is the most macro trend of AMC, starting from IPO, where your bull run starts right here into the January squeeze. Your first bounce off as support, your second and third bounces off as support, your fourth and fifth bounces off as support, break below it, reject it, now it's resistance, one rejection there. This is the original flat portion, rejection, and then you break over it again. New macro, come down to it, retesting, bounce off into your June squeeze, and again, all the way back down now, back to this trend. At, again, our third bottom, the lower low, the lowest low, the all-time low landmark, and then forming the uptrend off. This looks great. Absolutely no complaints. This looks amazing. Once again, volume will be relative to speed. The original macro of AMC took roughly 8 years to play out. The whole macro took roughly 8 years to play out. The current macro, we're sitting almost at 3 years at this point. From 2021, we're pushing into 2024 in a couple months. So 8 years for the first macro, roughly 3 years for the second macro. We're at the end of it. So roughly 3 years for the second macro. And the reason being is because volume will be relative to speed. The more volume being injected into the market, the faster these iterations will play out, and the greater the magnitude to which they will play out as well. Meaning, the original macro was a 92% move from support to the top of the June equivalent, 92% move. The current macro from support to the top of the June equivalent move was a 1200% move. The next macro of AMC will be a higher percentage move, bouncing off of this trend, i.e. my price target $1,400. And from there, you know, barring the market just completely collapsing, it'll continue to play out like this. You'll get two squeezes. So first squeeze, pullback, second squeeze, and then a wedge. And then over and over again. It's just repeating macros. It's the whole market. It's not just AMC. Market-wide, this is how the market operates. And the macro will be faster. The next macro will be even faster than this one. As volume is being injected, speed will increase. So that's the macro perspective of AMC. Now let's zoom in even more. So this is the macro tracking. I started with this, showing you we are at the end. AMC is repeating January 15th on every time frame. We are at the end of January 15th on the macro. The point at which you knife into your V, and then you gap up your macro break, your fractal break. This is a micro, we're looking for the macro. So I started with that. Then I covered AMC's actual macro from IPO, what we're tracking, and now zooming in even more. Now we're gonna be looking at the flat portion, the end of the macro where you drop down from the blue, into your flat portion, play out the flat portion, and then you squeeze into a new macro. So now getting into that, here's the flat portion. And again, I've been tracking this since my very first video on YouTube. My very first video. So here it is, dropping to the flat portion, you're very choppy down here on both sides. Drop to the flat portion, very choppy, gap up, and then you get this double peak move, which brings you to your second bottom, which is a higher low on the daily. Double peak move, second bottom, higher low on the daily. You get this cup on the side in the yellow, on both sides, rejecting that yellow horizontal line. That's your macro break line. Down to your second bottom, again gapping up into your tri-peak, three pokes above, and then again knifing down to your third bottom, the all-time low and the lower low landmark, which is where we are now. So this is where we are at the third bottom, and we're in the middle of this uptrend, and here we are in the middle of the uptrend. Again, date range. From the beginning of the flat portion to the end of it, 342 days. Current macro from the beginning to the end of it, or from the beginning to where we are currently, 316 days. We are sub 30 days away from being 1-to-1 with the flat portion of the last macro. I said it in my last video, I'm saying it again. This is looking very, very nice. The timing of this being 1-to-1 with the flat portion, this is where the macro resets into a bullish macro. This looks amazing. It looks absolutely perfect. And then, just getting into the EMAs now. I said this, it had to have been a month ago. On the way down, this 20 EMA in white would eventually meet the price action, and that we would fight to claim the 20 EMA before gapping up over it. And here we are at the 20 EMA fighting to claim it. Actually closed below it on Friday, but the EMAs I've mentioned multiple times are perfect as well. So the 20 starting under the 50, double cross in the middle of the move in between your first and second bottom, double cross in the middle of the move in between your first and second bottom, crosses the 50 to the downside, crosses the 50 to the downside. Then you have two pokes through, one at the second peak and one at the third peak. And then over here, same thing, crosses here, second peak, comes back underneath, crosses briefly, third peak, and then it crosses to the downside again. Coming down to your third bottom, your lower low and all-time low landmark, 20 comes down and eventually meets the price action where you're fighting for the 20 EMA. And here we are, the 20 has now met the price action, fighting for the 20 EMA. And now we're looking for the gap up to the 50 EMA, which also could theoretically take us to $40. That's where we are. It's also possible, and I showed you this before, to complete the V, the end of January 15th, right before your macro break. It looks like we need a candle that brings us up to this range right here at $13.80, $14 roughly. It is possible, and I'm going to get into the micro tracking right after I do this, but it is possible that this 50 EMA comes down even lower, and that's where we meet it, right at $13.80. I think it's at $16 right now. It is possible it comes a little bit lower, and that's where we meet it to finish up the V, and then we get the gap up we're looking for. Now let's get into the tracking. There's two possible scenarios for the tracking. We'll start with this one first, and this was the original thought, and I don't think this is off the table yet either. Gapping up Monday is definitely on the table, but I'm going to show both perspectives, and we'll find out Monday. If we don't gap up Monday, it'll be perspective 2. If we do gap up Monday, it's this perspective here. So here's coming down to the third bottom, the lower low and all-time low. And you get this cup, right? So you get this cup move here. Here's the rest of the downtrend to the bottom, and then you get this cup out of it. So this was the original thought, was coming down here. Here's the cup. And then you drop down to this part here, this very choppy ascending pattern. It's more or less a W, just multiple W's actually, just chopping here. This was the original thought, that coming down here, this was that part, that choppy W ascending move. And then this would have been the January 15th move, the equivalent, the high of it. And then Friday's pullback was the V on the micro V, looking for the gap up now. And actually looking at it from this perspective, if you're just running a trend across this move right here and over here, same thing, you bounced right off of the top of the range here. And as a matter of fact, this move actually came lower. It actually came through this range. So this looks even better than this. And that's that. I mean, we're going to find out Monday. If we don't gap up Monday, then it's for sure this perspective. And this is completely fine too. I mean, it's just going to push us back a week, maybe 2 weeks. But here we are coming down to the bottom, the cup, and then, so everything's labeled. I mean, it's kind of hard to explain this. You just look at it. I mean, coming down, here's the first top, and then you get this W move breaking below this line. So there's a dashed line here, right above this purple box right here, dashed line right across. So you poke through on the first cup move, and then you break below and you get this W. This took a lot longer to play out in this perspective, but here it is. And then you poke through it, a lower high than the green. You poke through it, a lower high than the green. and then you break back underneath, and then you get the rest of the move up to the top, like this. And now we would have just hit this landmark here with the red arrow and about to come down and then get this choppy move before we get the rest of January 15th in the gap. Either perspective, it does not fucking matter. It does not matter. This is where we are in the macro, whether it's this perspective, whether it is this one and we're about to get the gap up now, it does not matter. This is where we are. If this is the correct perspective here, we could be expecting to come down to roughly 850. And I know some people might not like to hear that, just landmark wise, just running this dashed line across. This pullback brought you right back to the yellow circle, right to the middle of the range of it. And here we are, 850 roughly. So you could possibly expect more downside Monday coming down to 850. And then you get this chop move here, which would be an uptrend. So you come down to 850 and you get this ascending move before you get the rest of this. January 15th would break us through this white horizontal line, come down, retest, and then we would get the gap up from there. So that's that. And here's the Fib spiral. Showed this last time from IPO, Fibonacci spiral. From IPO until present day. So here is the first touch on it, the original flat portion, January and June squeeze equivalents, and then the downtrend from that. And then every time we came up to the resistance, halted, and here is retesting on the spiral. Looks amazing. So that, Bollinger Bands, covered this last time from IPO all the way through. Bollinger Bands are pretty normal, with the exception of 3 different spots. The first being January 2021, first squeeze, where the Bollinger Bands open up like crazy to the downside and the volume spikes crazy to the upside. That's right at your first squeeze. Bands close up, and then right at your June squeeze again, the bands open up to the downside, the volume spikes. There's your second squeeze. Bands close up all the way through the macro, the downtrend, and once again have opened up, and volume is spiking again, right when we're about to squeeze again our macro break. And this volume profile looks amazing. No complaints there. And a very quick RSI OBV volume update. Here's the macro perspective up top. Here's the volume on the bottom. Again, volume is matching January and June 2021 levels. OBV has broken the downtrend on the weekly, broke out, retested, and actually formed a new all-time high. We're sitting at all-time high OBV on the weekly right now, which looks great. I mentioned multiple times, increasing OBV on AMC is a very good sign. So from IPO, very flat all the way through, and then you break all-time highs here in the January squeeze you leg up, the June squeeze you leg up, and from $400 all the way down to $7, OBV has just been hovering here right under all-time highs and has finally broke and found a new all-time high OBV. Again, right before we get our macro break, looking for a squeeze. So this looks awesome. And RSI on the weekly is still oversold. 30, I think it's at 30 right now, the RSI on the weekly. There is a shit ton of room on the weekly RSI to the upside. So this looks amazing. And that's it for the video. I probably could have just shown this and ended the video. I don't think there's anything else to say other than this. This is all you need to know. Legitimately, this is the only chart that you need to know. If you want to understand AMC, if you want to understand the price action of AMC, this is the only chart that you need to understand. January 15th, because this is every day, every single day. This is the chart that we get. That's it. That's it for the video. Again, the 2 scenarios. Possibly, it's still on the table. I've not ruled this out yet. Gapping up Monday is on the table. If we don't gap up Monday, and I know this is like polar opposite, but you could expect more downside down to 850, where this would be the landmark here, and then you'd come down and then form this uptrend before we get January 15th, and then you get the gap up here. Either way, either perspective, it really doesn't fucking matter. We're right there. Here's the third bottom, here's the third bottom, and here's the uptrend from it. And it looks great. It looks great. We're almost 1-to-1 now, 316 days versus 342. We're less than 30 days away from 1-to-1. Yeah, we're there. We're there. That's it. That's it for the video. Excited for next week. I'm excited for the next couple weeks. Catch you guys in the next one.